On Wall Street, there are players, and then there are the people who change the entire game. This is the story of one of those game changers, Benjamin Graham, the architect of rational wealth. Think about it. In a world that runs on hype, and let's be honest, total panic, an idea like this, it was absolutely revolutionary. It basically suggested you could tame the market's chaos not with luck, but with simple logic. So who's the genius behind a statement like that? His name was Benjamin Graham. And look, his philosophy didn't just make him successful. It created a whole framework, a blueprint, that would go on to influence generations of investors. We're talking some of the biggest names you can think of. So, to really get this philosophy, you've got to understand the man behind it. And his story, well, it doesn't start with a silver spoon. It starts with hardship and a truly extraordinary mind. So Graham was actually born in London, but he moved to New York when he was just a kid. And things got tough. His family really struggled after his father passed away. But wow, was he brilliant. It was just undeniable. He graduates from Columbia right near the top of his class, and of course, Wall Street noticed immediately. I mean, by his mid-20s, he was already a total rising star, digging into companies with a kind of depth that back then was practically unheard of. So everything is going perfectly for this young genius, right? But then comes the one event that would test everything, that would just wipe out fortunes, and ultimately it would completely redefine his entire way of thinking about money. And we're talking about the Wall Street crash of 1929. This wasn't just some market downturn, okay? This was a full-blown financial apocalypse. It's what kicked off the Great Depression. Fortunes that took decades to build just vanished in days. And Graham, he was right there, in the thick of it. And the scale of that devastation, it's hard to even wrap your head around. Graham's own investment partnership lost nearly 70% of its value. 70%. Now, this wasn't just about losing money. For him, this was a deep intellectual crisis. It forced him to face a really hard truth. His smarts, his methods, they had failed him. For most people, that would have been it. Career over. But for Graham, this was the start of an obsession. So instead of just running away from the wreckage, Graham started to study it. He asked himself this one incredibly fundamental question. And the answer he came up with wouldn't just rebuild his own career. It would lay the groundwork for a whole new way of thinking. So literally out of the ashes of the Great Depression, Graham builds this logical, super disciplined system. He basically creates the playbook for what we now call rational investing. What he saw was that most people weren't really investing. They were just speculating, treating stocks like lottery tickets, buying based on rumors and hype. Graham's alternative was, well, it was radical for the time. He said, stop treating a stock like a piece of paper you trade back and forth. Start treating it like what it actually is. A piece of a real, living, breathing business. And its price? It should be based on its actual, tangible value. And this became what we know as value investing. The idea is actually pretty simple when you break it down. Find a great business that the market, in its usual short-term panic or excitement, has totally mispriced. You buy it for less than it's really worth, and then you wait. Patience wasn't just a good personality trait. For Graham, it was the entire strategy. And that brings us to maybe his most famous idea for managing risk, the margin of safety. Think of it like this. Let's say a bridge can hold 10,000 pounds. You're not going to drive a 9,900-pound truck over it, right? No way. You drive something much lighter to be safe. Graham applied that exact same logic to stocks. Buying a company at a huge discount to its real value, that was your protection. That was your buffer in case you were long. So in 1949, he takes all these lessons learned the hard way, and he puts them into a book that would become, and I'm not exaggerating, the absolute Bible of investing for millions of people. It's called The Intelligent Investor. And it wasn't some get-rich-quick scheme. It was all about how to invest smartly and, maybe more importantly, how to avoid those huge catastrophic mistakes. But Graham's ideas didn't just sit on a shelf in a book. Oh no, they were taught, they were practiced, and they were perfected by his students. And one of them, well, he would go on to become the most successful investor in all of history. Yep, a young, super eager student at Columbia Business School named Warren Buffett was just completely captivated by Graham's logic. He didn't just take his classes, he actually went to work for him, just soaking up every single lesson he could from the master. And to this day, Buffett has never, ever been shy about his mentor's influence on him. This quote really says it all. The guy they call the Oracle of Omaha flat out credits Graham as the person who shaped his entire investment philosophy.
I mean, that alone tells you everything you need to know about how powerful Graham's ideas are.
So, what did this Graham effect actually look like in practice? Well, he basically turned investing from a game of guesswork into a discipline, a science of analysis. He taught people to stop listening to the hot tips and the rumors and to start actually reading financial statements, to focus on the real, long term stuff like a company's earnings power and its asset values, not the market's crazy mood swings every single day. And really, that brings us right to his core message, which is just as true today as it was then. The market is always going to be a roller coaster of fear and greed. It's an emotional beast. The key to winning, Graham taught us, is to be the exact opposite. Be disciplined, be patient, and above all else, be rational. Benjamin Graham's whole philosophy was forged in the fire of a historic crash almost 100 years ago. But it leaves us with this question that feels more relevant right now than maybe ever before. In our world today, a world filled with crypto crazies, meme stocks, and just constant 24/7 hype, is being rational the single greatest, most powerful, and most enduring advantage an investor can possibly have?